Hello and welcome to the deVere live webinar series. My name is Trayford and I'm joining you here live in our deVere Shanghai office. And we're being joined today by Horne, Director at Fulcrum Asset Management, live from the UK. And he's going to be talking to us about responsible investing. Is it sexy? Is it safe? Or is it silly? So I'll be handing over to him a bit later on. But first of all, let me run you through the format for today. Explain how it's going to work for those of you that are new to the webinar series. And basically what we're going to be doing is, first of all, we want to know your opinion. We're going to be doing a poll and asking you questions about responsible investing and what you think is important. We're then going to hand over to Mark, who's going to go through his presentation. And hopefully through that presentation, there's going to be lots of questions that you want to ask. There's going to be things that come to your mind that you want to ask Mark about. And what we'll do at the very end is we'll give you 10 minutes to ask those questions to Mark. So if you do have questions come in, at the bottom of your screen, you'll see a chat box. So in that chat box, select all attendees and panelists, or all panelists and attendees, and then put that question in. And what that means is all of us can see your questions. So once that comes in, and then your question comes in, hopefully it will inspire other questions. And then if we've got enough time, we'll put them all to Mark. If not, we'll get those released in an email and into our WeChat group after the webinar. And then at the end, what we're going to do is also give you the opportunity, if you want to take action on the information that you've received, want to learn more about responsible investing or about any other type of investing, we'll give you the opportunity to reach out as well. Okay, so what we're going to do then is release the poll. So this poll is, we want to know is which area of responsible investing is most important to you? Is it clean energy? Is it responsible consumption, reducing inequality, clean water and sanitation, or other? A different area completely. So clean energy, responsible consumption, reducing inequality, clean water and sanitation, or other. I'll leave that up there for you to vote. Select one of those. And I'll get Mark's opinion on that a little bit later. And with that, Mark, I'd like you to turn on your camera and turn on your microphone. Mark Horne is joining us from the UK. There he is, and he's Director of Fulcrum Asset Management, and I'll let him introduce himself as well. Over to you, Mark.
Well, good evening. Thank you very much, Will, and thank you everyone for your time this evening. There's a huge amount going on in the world at the moment, and sparing some time to listen to us. Whether you think what we're about to say is safe or silly or sexy, I'll leave to you, and I'll see how I can weave those three words into this presentation. I certainly don't think spending time thinking about responsible investing is silly at all. And the way that we can achieve as investors enhanced risk-adjusted returns whilst combining that with something that is better for our planet must surely be a good thing. So I hope you'll enjoy this presentation. What I'll do is I'll give you a quick introduction to Fulcrum, talk a bit about how we look at the world in terms of mega trends, and then we'll narrow and funnel that down into the sorts of responsible investing one can undertake that seeks to benefit from those trends whilst also being responsible to the planet. So moving on, let me, oops. There we go. Sorry, Fulcrum, a quick introduction. So Fulcrum Asset Management was founded 16 years ago by Gavin Davis and Andrew Stevens. They worked together at Goldman Sachs Asset Management. And Gavin, you may have heard of before. He was chairman of the BBC after leaving Goldman Sachs. And he's also in the FT every week. You'll see an article on, usually on a Sunday, where he talks about what's going on in the world, shares his thoughts, and he's an incredible input to us at Fulcrum in terms of helping us have a good awareness of what's going on from a macroeconomic perspective and giving us some context. And at times of change such as this, that's incredibly valuable. So I sit within the alternatives team. That's the third block there. And our investment universe is considering things that we consider to be alternative to your core investments, so core equities and core bonds. And I'll bring that to life a little bit more in a moment. And very much we are a firm that's driven by research, be that macroeconomic or be that research that's more focused on responsible investing. Why do something now? Well, I think the fact that you're here participating in this, and we hear more and more people expressing an interest in responsible investing, is the answer to that question. It's certainly not silly. There are huge changes taking place in the world, both literally today, but also across the last decades, and we would expect those things to continue to change. And at the same time, markets have been more or less on a one-way journey since 2008 and until right now, where everything seems to be going up in price. So the market cycle has been very extended, and central banks and governments have been doing the very best they can to sustain them. And part of that is incredibly low interest rates. So your forward-looking returns from core equities and core bonds have been somewhat muted. So that's the sort of the investment environment. Thinking about these mega trends, three of them that are probably at the top of the list, starting at the bottom, is technology. Who would have thought 10 years ago that we'd sit and have our worlds on these phones? There are diaries, there are contacts, there are emails, videos, photos, everything on one tiny device. The fact that I'm talking to you from my home in London to your homes almost instantaneously via video is incredible. Again, it was really unthought of, and how would we have coped if this had happened 10, 20 years ago? Business couldn't have functioned as it is today. Climate change, we are hearing more and more devastating stories about the Australian fires that we've had, same in California, floods, the melting polar caps, the terrible death of the coral reefs around the world. There are numerous examples of how climate is impacting the sustainability of our Earth. And that's something that many of us want to address. That would be my number one from that poll. And then demographics. So we are a growing population, we are an aging population, and we're moving as a population. In China alone, the amount of migration from the countryside into the cities is vast, and there are huge implications from all three of those factors. Now, because of that, and because these are such long-term factors, sorry to repeat, there are some really interesting investment opportunities that one can pursue. And there are pockets of value and opportunities, whether the markets are high or whether they're low. And very much we think that the best way to think about investing with a responsible investing lens is the longer term, because that's where these trends establish themselves. That's where one can be rewarded for making a commitment to them. So a little bit more on these trends. I mentioned climate change. One of the key ways to address that is to change the way that we consume or supply and consume energy. So we'll talk about some case study from that linked to solar panels, which is what you can see on the screen there. There's huge efforts to try to move away from dirty or old energy to clean and renewable energy. That presents huge investment opportunity. And it's not necessarily just about saying, oh, I'm never going to invest in anyone that produces dirty energy. It's a case of understanding what the transition is from dirty to clean. And it might be that there are investment opportunities that can be made from rewarding past sinners, so to speak, who are going through that transition and could have a very meaningful impact on the future sense of direction towards clean energy. Resource scarcity, with a growing population, with more sophisticated food requirements, that there is an increasing need for us to both grow, produce and distribute food, as well as water, as well as managing waste. It's a huge challenge. Sustainable development and global consumerism. One of the things that have been brought to light in the recent lockdowns is e-commerce and using the likes of Amazon, etc., to get the shopping brought to us. People talk about the death of the high street. There are huge changes there. And the mechanisms around that are also significant. So there's the packaging that comes with all of these deliveries to our homes. There's the travel and transport logistics. Global urbanization, I mentioned moving, for example, from the countryside into cities, moving from country to country, from city to city. It's much easier now. The whole the airlines and the transport industry have facilitated this significantly. We may be at a pivotal point right now as to how that may evolve going forward. Global connectivity, we've touched on, us talking together today. The infrastructure spend required to move on to 5G is significant. There'll be more of that. So global connectivity is an ever demanding and interesting investment opportunity. And lastly, the demographic change that I've touched on. So these are 6 big megatrends that it's worth paying attention to. And when you look at a typical portfolio, often you won't find a significant weight of that portfolio directed to these sorts of opportunities that could really make significant returns for us as investors in the long run. So how do we try and group that together? So diversified liquid alternatives is the strategy name that we talk about when thinking about these investments. We think it's critical to have a diversified set of investments across a broad opportunity set. With these megatrends, you can never quite tell what will manifest itself when and how, because we're thinking about the future. And the events that we're going through right now could have a manifest effect on how some of these could speed up or slow down. One can invest in both liquid and illiquid opportunities. Our focus is principally on liquid, but that's not to say that illiquid opportunities can't be interesting as well, but just for us, liquid. And then, as I say, alternatives, complementary to traditional equities and bonds, and so diversifying. So it should be good for an overall portfolio structure, as well as I say, responsible investing. So let's look at the 3 groups of assets that we consider, and then we'll burrow down to look at the responsible investing components of this. So listed real asset equities. I have to say that slowly because I keep getting it wrong. This is about generating growth with some income for your portfolios. And we're talking here about interesting long-term themes that reflect these megatrends. So there would be infrastructure, real estate, natural resources. These are real assets, and companies whose businesses are based on those real assets will tend to prosper with the value of those real assets, which we think will increase over time. Property generally increases over time. Infrastructure and the spending and the development of infrastructure can be very accretive to investment returns over time. So these are equities or companies whose businesses are based around these real assets. Then there's alternative credit. This is about income with some growth rather than the other way around. Because they're bonds, we're talking about capital preservation, and they bring down some of the equity sensitivity of the portfolio. So they help diversify. And these are more your, as it says, alternative credit. So it's convertible bonds, bonds that in the right circumstances might turn into equities, bonds from emerging markets, higher yielding bonds, and securitized bonds. These are all quite interesting and quite niche within the fixed income world and can really help to diversify your portfolios. And then diversifiers themselves, this is where you're accessing a manager's specific skills. They can go long and short their markets. And the idea here is that very much the emphasis is on capital preservation. And even in events that we've just had, you'd be hoping that these managers would be either flat or slightly up, or if they were down, only modestly down, because they should be able to generate their returns irrespective of what's going on in the rest of the world. So they provide a ballast for the portfolio. So you have your equities and your credit generating the bulk of the returns, and then the diversifiers helping to, as I say, give you a robustness and a ballast to your portfolio. Now, getting more onto the topic of responsible investing. Starting in the bottom right, Fulcrum as a firm, we're very committed to responsible investing. And I'm very proud that our team within Fulcrum has been pioneering that effort. I'm a member of the Fulcrum Responsible Investing Committee, who oversee everything that we do at the firm. We set our goals and our agendas and our ambitions, and we debate and we discuss what does responsible investing actually mean. And that's not easy, because you can start with a set of values, that things that you want to just avoid, but one person's values are very different to another's. Someone's life may have been influenced by tobacco, someone else's by alcohol. Someone may have a terrible aversion or fear about another topic. What we have to do is to try to think collectively as a team, rather than just screening out for these different values, let's think about how we can positively engender change by investing positively and responsibly. And that's what we try to do. It's not easy, but it's a fantastic challenge, and you feel good as a result of that. So as a firm, we have signed up to 2 major initiatives: the United Nations Principle for Responsible Investing and the Task Force on Climate-Related Financial Disclosure. Bit of a mouthful, but the idea is that it brings to bear how we think about responsible investing, the transparency that we do that with, efforts to try to reduce carbon emissions, at least through the investments that we make, and a direction of travel that shows that we're being positive. It's a big commitment to do this and to maintain our ability to be signatories, but it's something that we're proud to do, and something, frankly, that we demand of the managers that we make allocations to in the funds that we run. We can, through this lens, if you like, be very proactive in trying to find interesting investment ideas that will comply with these principles. And so clean energy is one of those, and that will be the first case study that we'll look at. And what we've done is to use a mixture of internal and external inputs to put a scoring mechanism together to help us make these decisions. Because we can think about the investment merits, we can think about the risks and various other factors, but we also need to think about the environment, social, societal, and governance risks that are involved. And when it comes down to it, if there are 2 investments that one might think about, and one has got far better ESG credentials than the other, we'll go with the ESG one. And similarly, if we find anything that breaches any of the tolerances that we have, those investments will be excluded. And we think that's a good lens for the long run to help make really good investment decisions. Now, the United Nations has a number of sustainable development goals. There's 15 of them, I think, and they're listed on the screen here for you. And hopefully, if you're looking on your phone, it might be a bit small, so I apologize for that. But the idea here is that we've tried to look at the investment universe, the sorts of investment ideas that we could pursue, and link them to those United Nations SDGs, as they're called. So in the top left there, you've got clean energy. And the 2 relevant points there are renewable energy and climate action. Agritech stands for agricultural technology. This is all to do with those food shortages and things I mentioned before. So we're looking about eradicating the world of hunger, preserving life and quality of life below water for our fish, for our reefs, and so on. And looking at life on land, looking at sustainable forestry, looking at how one might preserve the rainforests and so on. Then you've got natural resources, about water and sanitation, responsible consumption, and the list goes on. So we try very much to think, okay, these are the goals. How can we make investments that are consistent with the pursuit of those goals? It's not possible to be perfect in every way, but having a direction of travel and seeking to build a diversified set of investments that are heading in this direction is an important contribution, we think, and almost gets sexy. So let's look at the case studies. I'm sorry, I had to thread that in. The first one, clean energy. So the megatrend, climate change, as we talked about. Many countries have signed up to the Climate Change Act, where we're seeking to reduce greenhouse emissions. And prior to the last few months, it was really very much top of the agenda. We had huge global protests. Greta Thunberg has done an astonishing job at really pressurizing politicians to bring this up to the top of the agenda and really bring forward their commitments. There's an awful lot that needs to be done, of course, as we know. And the migration to sources of clean energy is a key part of that. So what we do is we think, okay, so we've got climate change. What are the sorts of investment opportunities that might be there where we can be supporting companies that are will hopefully benefit that pursuit? So the first one, as an example, would be harvesting energy from the sun. And so that's solar. Now, there are lots of different ways that one can invest to benefit from that migration or that trend. You could go and buy a load of solar panels, or you could buy a firm that manufactures solar panels, or you could invest in a solar panel farm. But there are a number of risks that are associated with that, such as political risks. So when Donald Trump became president, he made disparaging remarks about solar energy and the companies that were directly involved with this, their shares plummeted. What you can do to be a bit more thoughtful and hopefully protect yourselves from some of these risks is to think about up and downstream of these themes. So what that means is, what are the component parts that go into building a solar panel farm? How do you get those parts to the farm? How's the farm built? How do you get the energy from the farm to the grid, both domestically and internationally, and so on? So we'll work through all the different sorts of components to that theme to think, how could we build an interesting exposure to this that's very diversified, so that you get the theme with less of the risks. And then we'll look across different kinds of green energies, for want of a better expression, and that's that third column under risk management. So you've got biomass, which is where you're burning animal or vegetable produce to generate energy. You've got solar, you've got wind, you've got hydro, which is water, and there's nuclear. So what we'll do first of all is think, right, what's the opportunity set? What's out there? So we'll look at the market cap, we'll see how many shares, how many companies are out there, are they liquid? Because liquidity, if you remember, was an important part of our opportunity set. And then we'll look at the ESG risks, and we'll use our own research, and we also buy some research in. There's a company called Sustainalytics, some of you may have heard of, that produce some very interesting research on both companies and countries and help isolate and identify some of the risks you may wish to avoid. And in that column, you'll notice nuclear has high. So the nuclear is viewed often as a green energy, but the problem with nuclear is when something goes wrong, it goes hideously wrong. And we thought those risks outweighed the benefits, and we could gain enough exposure to this theme through the other four. So in fact, the idea for our clean energy basket of securities would be a diversified selection of biomass, solar, wind, and hydro securities, globally diversified. So that's one example. Another one, I hope you don't find this a bit fishy, salmon farming. The trend here is the global food requirement and food scarcity that I mentioned. Not only is there increasing pressure on global food supply, especially right now, there's changing tastes and habits. There's been a certain westification, if I dare use the expression, of fast foods over the last generation. Where more and more people are moving to being vegetarian or being vegan. And technology is changing dramatically how foods are produced and distributed as well. Now, so one sub-theme within this is our need for protein. Now, this is not addressing the needs of the vegetarians or the vegans, but often cited is the carbon intensity of the production of beef. Salmon, which is increasingly popular, is actually a really low carbon intensive source of protein. But it's a quirky protein in that it only really prospers in 4 key areas in the world. Salmon like cold waters that don't freeze. And the 4 main places that you can find that are Chile, Canada, Scotland, and Norway. So what we do is we go through the same process once again, evaluate the market size, look at the ESG risks, and also look at the purity to the theme. You can often find access to some of these themes as part of a larger conglomerate, for example. We don't want to be distracted away from the theme and what we're trying to achieve here. So purity to the theme is very important. So as we look through these markets, it was a lot harder than on the clean energy side. In fact, it was only really Norway that we thought ticked all of the boxes for us. Decent sized market, good focus on ESG and managing the business as well, and very pure to the theme. Chile was second best, but actually the way that the salmon fisheries are operated there is under some much more questionable leadership, with health and safety standards really quite poor for the workers. They're suffering outsized numbers of deaths from accidents, which is not acceptable. So that was a negative screen for us. So Norway, in this instance, became the focus. Now, this is quite niche, and it's just one sub-theme within a broad range of themes that look to reflect this global food requirement. But it's a bit of a quirky one that we thought we'd highlight. And the third one is water and waste, slightly more obvious. We are consuming lots of water. We have a huge need for clean clean water. We have major challenges with water salinization and getting clean and fresh water to large parts of the world still today. And we are consuming huge amounts of waste. Working from home, I've been astonished with how much waste I create in my household with my recycling bin, how it's filling and filling. And that's a microcosm, as you can see from that middle picture. It's a huge challenge that the world faces, and we will run out of space if we don't deal with it. So we went through the same process once again at looking at, in this case, waste management, ways to try and improve the amount of recycling, trying to improve the way that waste is dealt with, is treated, is got rid of. And once again, different investment opportunities, water, waste, recycling. We look at the market size, we look at the ESG credentials and the risks, and we look at the purity to the theme. And in this instance, we liked very much the idea of investing in the water and the recycling sectors, which we think will be of huge importance to the world going forward. So that hopefully gives you three ideas of some of the more explicit things that we can do. Within credit, it's about understanding how our managers think about E, S, and G risks as part of their credit research process, either on countries or on companies, and factoring that into our manager evaluation process. If they're not paying enough attention to it when they could, their scores will be lower and the likelihood of us appointing them will be less. And we positively will engage with those managers to try and improve their investment processes. The third leg to the portfolio is diversify, as I mentioned at the beginning. And what you have here are a few different investment strategies that perform quite differently at different times. Equity long short, as the name suggests, is where you might go long one company, short another, thinking that the company you've gone long will do well and vice versa. And there are a number of different strategies that are a bit different, but still liquid, that can help provide that ballast to your portfolio, as I mentioned. And the idea will be, if you diversify across these interesting strategies, that thick orange line is the hedge fund that Fulcrum has been running since 2007. That is a much smoother range of returns relative to all the different component parts. And we think that combining this with these responsible investments can help make a much stronger portfolio for you that is diversifying from those core equities and bonds I mentioned before. And it's worth mentioning again that these are the investments that, when things are going a little bit crazy, as they have been in markets recently, should perform much more stably compared to the rest of the market. So in summary, what we're talking about here is looking to find investment opportunities that really reflect the big mega trends that are taking place across decades in our world, that are quite often underrepresented in your portfolios. And very importantly, to today's attention, you can access and look at these themes and build investments from them through the lens of responsible investing, or ESG. And so hopefully it's a win-win. It's a win for you as investors, and it's a win for you as global citizens. And of course, it's a win for future generations for our children and grandchildren in terms of the sustainability of the world. And we think today, both because of what's been going on more recently, but just because of the importance of these themes, it's a good investment opportunity also. So with that, let me hand back to Will. Thank you very much.
Thank you very much, Mark. That was excellent. And yeah, so what I wanted to do actually is just to first of all, get your opinion on the poll. So I will end that polling. We didn't get all of the votes in, but in general, people were mostly interested, or found the most important areas were clean energy and to reducing inequality. So clean energy and reducing inequality were the main aspects people wanted to concentrate on. Would you say that's fairly typical? Are you surprised by that at all?
No, I think that makes a lot of sense. Inequality, I didn't touch on this particularly, but that will come under the S of ESG, and it matters a great deal when we are doing research into emerging market debt, particularly. We've seen terrible amounts of social unrest across the last couple of years. Not far from you in China, of course, with the unrest in Hong Kong, in Chile, here in London. We've had a fair whack of unrest. Some of it has been to do with climate change, which is, one would argue, necessary unrest. Some of it has been to do with just absolute unfairness that's going on in society. And supply chain management would be a good example of where one can think about inequality and unfairness, together with pressurizing governments to have better minimum wages and so on. I think it's been really interesting when you look at how governments have stepped in to try to support society in this last couple of months with the virus, and whether that might be the beginning of a change. Fingers crossed.
Yeah, no, it'll be interesting for sure. Okay, so we had a question we had coming before the webinar. Do you think cheap oil prices or cheap oil in general?
Yes, that's a question we've heard a couple of times. It's when oil is expensive, making the effort to move to clean energy obviously is somewhat easier from a financial perspective. But we strongly believe that there is an ongoing demand on the part of institutional investors as well as private investors such as us here today to do our bit to try to help the planet and to address climate change. So it's possible it could slow down a transition for some more kind of marginal decision makers, but we think absolutely there will remain a very strong and committed move to clean energy.
Yeah, good. I agree as well. Do you, as a fund, do you consider yourselves sort of thematic long-term investors, or are you trying to take advantage of more short-term tactical opportunities?
That's a good question. We think, because we are very focused on these mega trends, we think we have to look at the long term. So what you would expect in a portfolio that we run is that you'd have a long-term mix of assets, your strategic mix, designed to benefit from these themes. And you might see just some small movements or evolutions to the portfolio over time to take advantage of shorter term opportunities, but they'll be small and not overly important in terms of the overall exposure that you have. It's these themes that matter. Lots of investment theory tells you that it's actually what you're in from an asset mix perspective that really drives your returns, rather than making little tweaks here and there. So we work hard not to make tweaks unless we really have commitment to them.
Yeah, that makes sense. So a question from Armando: how do you see the potential performance of a responsible investment strategy versus a more traditional strategy?
Not an irresponsible one.
An irresponsible one, exactly.
Well, so we believe that in the long run, the responsible investment strategy should outperform. And it's interesting, when I was doing research into a high yield manager who was launching a new sustainable investment fund, I was quite pleased to see them agreeing to measure their performance against the broad market rather than against an ESG screened index. Because really what we are looking to do by tapping into these trends is to tap into what we think will be the drivers of global return and global change going forward. So as investors, we should benefit from that. So our expectation is, in the medium to longer run, the responsible investing portfolio should outperform. When more and more attention is being paid to how companies run their money from an ESG perspective. And if we collectively as investors increasingly give our money and give support to those companies and those countries that run their money and their companies better from an ESG perspective, you'll encourage more and more behavior. And we see that with the way that companies are reporting now. You have ESG committees, you have ESG sections in all company reports that was never there before. So the awareness is improving, and we think the returns will be better over time as well.
Yeah, excellent. How would a client, an existing client who's got investments in, it might be funds,
I'm really sorry, Will, that the video cut out there and I couldn't hear you beyond how would a client.
Okay, I'll try again. Can you hear me okay now?
I can.
Yeah, perfect. So how would a client know how responsibly they are currently invested, whether they're in a fund or an ETF or whatever it might be, how they assess how they're invested?
Yes, so it's very difficult to know on the face of it. So some companies are beginning to introduce ESG scores in their reporting. And so they might show their portfolio versus their benchmarks portfolio and have ESG scores. So you could see whether it's scoring better or not. And those companies that are more alert to and integrate responsible investing more are doing that increasingly. But it's hard to know. And frankly, the only way to really know would be to ask the fund managers or your sales representative what their approach to responsible investing is and how they measure that. Yeah. It's very difficult. One of the challenges with responsible investing is there's very little common language and very few standard policies that are adopted. So you have to be really thoughtful and take time. There are concerns about, you may have heard of greenwashing, where companies take a product and then they just give it a new title and pretend that this has always been there. It's difficult to really discriminate unless you dig into detail. So what I'd suggest if you wanted to find out would be to read up and identify a few key questions that are relevant to that asset class and ask them how they factor these thoughts into their investment process. The other thing, just quickly, is what you'll find is some funds just screen out large swathes of the universe. So, for example, you might find a global equity fund with no energy, no legacy energy companies in it. Now, that's potentially fine, but what you might be doing is throwing the baby out with the bathwater there, because from an investment perspective, a lot of the returns come from when you transition from old energy to new. So you want to understand not just what the companies were doing in the past, but what's their direction of travel? How committed are they to that? And are you therefore prepared to invest with them on that journey? And that would be a question you could ask the fund manager.
Yeah, excellent.
Is that helpful? Does that address the question?
Yeah, absolutely, absolutely. I was kind of expecting very difficult, but yeah, for sure. I mean, companies can change their own internal strategy as well, can't they? That's an important thing.
They can. The other thing that it's not, we haven't really got that yet from a fund perspective, but I think it will come more explicitly with the likes of Morningstar and so on, where they will give ESG ratings more consistently to funds. That's coming and it's in the works. So hopefully that will become more useful with time too as a guide.
Yeah, for sure. It should be part of people's selection process. Absolutely. Okay, excellent. Well, thank you so much. And if anyone has other questions that they want to throw in, haven't had a chance to, we can find them via email or we can get them over to Mark. I'm sure he'll be happy to send them out in our bulletin after the webinar. And so what we want to know now is, obviously there's a lot of information, a lot of great information that you might want to take action on, that you want to say, okay, excellent, how do I find out about my current funds? How do I invest into something like this, whether it's in Fulcrum? I mean, we're lucky enough as a company, deVere, that we have the DVAM funds that incorporate Fulcrum, or any other kind of investment strategy that allows you to invest responsibly. So if you'd like to talk to us about that, just click one of those options, whether it's via a phone call, WeChat, a Zoom video call, via email, or want to come to our Shanghai office and meet us in person, then click one of those options and we can reach out to you and talk to you exactly about how you can be investing responsibly. And with that, Mark, I'd like to say thank you very much for your time.
My pleasure. Thank you very much for the opportunity, all, and best wishes.
Yeah, thank you very much. And I'd like to say thank you to all for your questions and for attending the webinar. And also thank you for your donations, obviously, throughout this supporting Give to Asia, who have been supporting frontline COVID-19, battling on the front line across Asia. And it's still obviously it could be an issue for a few years yet. So it's been great support, and thank you so much for your donations. And with that, we'd like to say good night. Thank you all.
Thank you. Bye-bye.